All of this totally depends on the section and segment that we are going to cover now, trading psychology. So as we draw into the final and conclusive sections of the program, you must understand that all that you have learned as technical analysis or even the fundamentals about cryptocurrencies generally as a market, and all the other things that we covered from basic understanding of what kind of market participants there are, what is your role as a trader, moving towards understanding what fundamental analysis or technical analysis is, and what are the methods of trading and the styles that as one person as a trader can use. All of this totally depends on the section and segment that we are going to cover now, trading psychology. If you were not able to manage or contain your emotions while trading, you might not be able to make gains or profits. If you're able to manage all these emotions and feelings of fear, greed, nervousness, or anxiety, then you will be able to not master your trading experience. Having control on these emotions and be able to manage is having the right mindset. What are the common mistakes that a typical trader often makes is based on psychological factors rather than any technical decisions. Although there are common trading mistakes that we will cover in our next section and the final section of the basics program for cryptocurrency traders, which is trade management. But in this section, we'll talk more about trading psychology. So while covering the basics of trading psychology, we will understand how do we manage emotions and how important is it to manage emotions. Then we cover understanding FOMO, which is fear of missing out. We also look a little bit deeper into how we can overcome greed and why is it important to overcome greed, and how we can avoid making general trading mistakes, and why is it so important that we debunk all these trading myths that exist for you to have a great mindset towards trading. So let's start with managing emotions. Fear, greed, overconfidence, or anxiety are all kinds of emotions that one must not keep with them while trading. It is very crucial. If you manage these well, you'll end up with a growing portfolio. Otherwise, it can all go to bust. So the next is understanding FOMO. FOMO, or fear of missing out, is a situation where a trader should never want to be in. At least I wouldn't want to be in a situation such as a FOMO, because you would tend to buy at a very high price due to greed, but at a higher point, and probably sell as soon as, because you're FOMOed in, you had the fear of missing out, you came in and suddenly the price started going down, you would want to exit. So this is a position that a trader never wants to be in. Next is what kind of trading mistakes that we need to avoid. We need to avoid simple trading mistakes that can happen to any trader at all times. Doesn't matter how experienced they are. Some common mistakes do keep happening, and we need to be sure that we don't possibly make the same mistakes again and again, such as over leveraging or trading in multiple markets. We'll cover this in trade management in our last section, but just to understand it, that there are going to be common mistakes, but we need to start avoiding making these common mistakes while trading. Next is a very crucial segment, which is overcoming greed. While making trades, there's going to be always a crucial aspect of how you can overcome greed and also cut down your losses, because not always your trades are going to make a call. Just having an emotional attachment with the greed of making these gains can also result in really bad losses, and all you need to do while you're not making those gains is to also cut on your losses. So overcoming greed is going to be a very crucial element as a psychology for you, going into making those trades happen for yourself. So these are the basics of trading psychology that you should always keep in your mind. Every time the trader is getting experienced, they'll keep on making mistakes. Definitely they'll have so many emotions that they want to suppress, and some they want to contain, and some they want to express. This is a natural style of a trader. You can be cautious on not doing the wrong things and be really alert on doing the right things in a systematic way. That's why trading is a methodology that you would adopt. Trading is a strategical move that you are preparing for yourself to go into the markets. You're not just going there to break the market or move the markets. Like I said, you're going there to find your own sweet space in the market, draw on strategies for your trading style, and see if it works and it's consistent all around. And if it's consistent all around, you should definitely be making those trades, and just make sure that psychologically you're super sound and smart of not making the common mistakes a typical trader makes. And if you can contain those things and you manage those things, you can be a great trader. In the next segment, we'll try to understand in a rather more detail of how you can manage your trades better.